Hi. Investing makes you feel two strong emotions, feeling bad and feeling good. The choice you have is when to feel which. Both depends on which kind of investor you are, value or momentum. Value investors like me feel bad when they buy and feel good when they sell. Momentum investors, like those I buy from and sell to, do it the other way around. Let's take value investors first. If you are one, you buy temporary disasters that have fallen down a lot. But this means you are buying into someone else's bad feeling. Why would you do it? Well, if what you buy is worth $5 and you pay $1 for it, so what, it can fall to 80 cents first before it starts going up and make you feel a little bad too? A bargain is a bargain. But to do this, you must first of all be absolutely sure it really is worth $1. And to be really sure, you must know more about it than the sucker who just sold it to you. Sure, if what you bought falls a bit more, it can make you feel bad too at first. But when you sell a few years later, you very likely feel wonderful. What's the other option? That's the one chosen by the sucker you buy from, the so-called momentum investor. He or she buys an overpriced stock because it is already rising, which makes him feel good. And because he believes he can forecast the future via charts or via analysts or whatever, and he just knows it's going to double or triple, and then he'll sell it to others just like him. But since an overpriced stock usually falls to its real value, the momentum buyer who feels good first, when he buys, will likely feel awful when it starts falling. And then he'll sell it just to get rid of the awful feeling. As I said, making money involves both feeling bad and feeling good. But you should do it in the correct order. Feel bad first when you buy, feel good later when you sell. Now, why do I mention all this story? Because as a value buyer, you should therefore be attracted by disasters as potential sleuthing targets. Always be on the lookout for the biggest disasters in the market, where established businesses have blown up temporarily, so the stocks are trading in multi-year lows. Then see which ones are worth your sleuthing attention. In fact, one of the best investors ever, Seth Klarman of Baupost, based his success mostly on buying disasters when they tank. You can read his book if you can afford $1,800, which is what it sells for today. Or you can read mine, The Sleuth Investor, selling a little bit less than that. It's a bargain, you might say. Back to disasters. Which are today's disasters? Which? Where to begin? Oil, real estate, airlines, hotels, restaurant chains, brand name luxury products, luxury travel. All right, let's take the last one. Luxury travel, cruise lines. Yes, cruise ships. The floating hotels for those who want to add pounds to the midsection while gawking at different islands on shore occasionally. Most cruise ships have become recently floating hatcheries for coronavirus, which of course blew up the stocks. So is this the reason I paid attention to them? Because the stocks are down? Not only that. Rather, I was looking also for business capitulation, and here I saw it. There has been a spate of articles about cruise ships being dismantled for scrap. How is that for business capitulation? Just as stocks are occasionally dumped at market bottoms, so are business assets often dumped or closed down at business bottoms. Like, for example, Canadian gas wells being shut in because no one was buying gas. Then NAFTA happens, the North American Free Trade Agreement between Canada and the US, and all this shut-in gas made its owners a fortune. Or how about whole neighborhood in Silicon Valley standing empty in 1991 because no one would ever work in tech again? Then, of course, the Nasdaq tripled. Or how about Boeing falling to 80 from 400 because they screwed up one plane design so no one will ever fly again? You know, the end of the world as we know it. Or how about Cominar, a real estate investment trust that owns a big piece of all Quebec real estate? Or how about Vedanta in India? Disaster, each and every one of them, which I mentioned. Anyone who has been buying them may suffer for a while, but in 3 to 5 years, perhaps the war will go on and the businesses recover, as in regression to the mean. After all, in all this, insiders are buying. So back to cruise lines. My assumption is that eventually people who have been quarantined for a year will suffer from cabin fever and wish to travel again. One day. Or at least some will. Maybe. Just maybe. One day, the virus hysteria will subside and be over, and then more ships would be needed because so many have been scrapped now, and so new ones will be built. You think? Maybe not tomorrow, maybe not next year, but in 3 to 5 years? I think it is rather likely. So are cruise line stocks a buy? Not so fast. Let me remind you, I'm making no recommendations. I'm only providing stock names as examples and as homework for your sleuthing. With that proviso in mind, take a look at a trio of cruise lines stocks. Carnival Cruise Lines, or CCL as a symbol, Norwegian Cruise Lines, NCLH, and Royal Caribbean Cruises, RCL. It's a good short list on which to start doing your due diligence. Look into the financials, the debt, honesty of operators, governance ranking, then check for scuttlebutt and rumors in the industry. Who is good? Who's less good? Who's bad? And make a list of questions you'd like to have answers. And then wait for insiders to start buying their company stock as a signal for you to intensify the due diligence. Like visiting places and talking to people in the industry. So what about those insiders? Well, as of today, there has been only one insider buying shares since the virus started its mini rampage. In CCL, Carnival Cruise Lines, one director bought in April this year. No one else in that company, nor anyone else in the other two cruise line stocks. Does this mean that this disaster will stay disaster for a while? Maybe. Or maybe we are close to the bottom of this trio, or even past it. However, being cautious, I'd wait until more insiders start buying and then spend more quality physical sleuthing time on the one or two cruise lines companies that your general due diligence found worth the effort. But remember, even if you do find a stock worth buying, you should be prepared to suffer a while holding it. That's the value buyer's fate. As I said at the beginning, the choice for you is to suffer when you buy or suffer when you sell. Suffer now, enjoy later, or do the opposite, and then value sleuth like me will take your money. What makes the difference is the work you put in. Real sleuthing work. Burning phone lines and burning shoe leather, not flipping to the internet at your desk. That's all for today. Let me know in the comment below what you think of the above. Subscribe to the channel. Tell all your friends so they're subscribed too. I'll see you next time. And meantime, thank you very much for watching.